Every economic cycle delivers the same warning. The people who rely on one income stream are the first to feel the shock. One restructuring, one policy shift, one unexpected downturn, and their entire financial life stands on a single, unstable leg. The professionals who rise above uncertainty are the ones who build systems, not salaries, portfolios, not paychecks, and resilience, not dependence. Today, we are not talking about side hustles or hopeful guesses. We are talking about engineered income architecture, the kind used by disciplined earners, strategic operators, and modern creators who understand the power of diversification. Across markets, the pattern repeats. Individuals who combine active income with skill-based digital assets, portfolio investments, and automated micro-ventures consistently outperform those tied to a single source. Here is the reality. A consultant who added a specialized digital product, a recurring membership, and an automated lending platform saw their income volatility drop by more than half within a single year. That is not luck. That is structural design. This session is about building that structure for yourself. Clear frameworks, proven pathways, and practical execution. No hype, no fantasy. Only the strategies that create financial durability. If you want true leverage, true security, and true independence, it starts with one decision. Never again allow your entire life to depend on a single stream. Today, we build the rest. Chapter 1. The Foundation. Why income diversification matters. For decades, financial stability was defined by one thing: a reliable paycheck, a single employer, a single contract, a single stream. But the modern economy has dismantled that illusion. Today, risk is concentrated at the exact point where you have the least control. When one company, one client, or one market shift determines your entire livelihood, you are not earning. You are exposed. Income diversification is not a motivational concept. It is a structural form of risk management and strategic leverage used by professionals who refuse to let uncertainty dictate their future. This is how founders think, how investors plan, and how high performers build longevity. The people who thrive in unstable markets are not the ones who work harder. They are the ones who engineer multiple sources of income that protect them from volatility while building upward mobility. Picture your financial life as 3 pillars. The first is your active income, the work you trade time and expertise for. The second is your scalable asset income, built from systems, digital products, intellectual property, or service automations. The third is financial investment income, the returns generated from capital working on your behalf. When all 3 pillars stand, you have balance. If one weakens, the others hold the structure. When only one exists, everything collapses the moment pressure arrives. Research has consistently shown this pattern. Individuals with 2 additional income streams, even small ones, experience significantly lower financial anxiety and higher long-term net worth growth. Not because each stream is massive, but because diversified cash flow reduces dependency and increases optionality. Optionality is power. It allows you to negotiate better, pivot faster, and take strategic risks without fear. To give this clarity, use a simple starter rule. 70, 20, 10. 70% of your energy goes to your primary active income, where your core expertise currently produces the highest return. 20% is directed toward building scalable business assets, the kind that can grow without matching your hours, such as digital products, consulting systems, or content-based pipelines. 10% goes to financial investments, the long horizon category, index funds, bonds, dividends, or peer-to-peer lending platforms. This allocation is not about splitting money, it is about distributing focus. Over time, the 20 and the 10 start feeding you more than the 70. The real transformation begins with the 90-day focus test. Instead of overwhelming yourself with big goals, choose 3 realistic income streams you could build within 90 days. Not dreams, not theories, but practical, achievable starting points. A specialized digital guide, a simple advisory service, a YouTube channel with consistent output, affiliate partnerships, a micro SaaS tool, or an automated lending platform. The goal is not perfection, it is activation. Once a stream is active, it can be scaled, improved, delegated, or automated. But if it remains an idea, it contributes nothing. Loss aversion plays a powerful psychological role here. Human beings work harder to avoid losing what they have than to gain what they want. Use that lever. Ask yourself what you stand to lose by depending on one paycheck. Ask what your future self would think of a life built on a single point of failure. Then ask what it would feel like to wake up with 3 different sources supporting you, giving you control, stability, and breathing room. Identity matters too. When you see yourself as someone who builds assets, not just income, your decisions change. You begin thinking like a strategist, not an employee tied to a single gatekeeper. You become proactive instead of reactive. You move from survival to structure. Here is the micro-action for this chapter. List 3 streams you can realistically start within the next 90 days. 1 active extension of your current skill, 1 scalable digital or systems-based asset, and 1 financial initiative that compounds quietly in the background. Keep the list visible. Review it daily. Commit 30 focused minutes to 1 stream every day. You will be shocked by how quickly momentum forms. This is the foundation. Diversification is not a luxury. It is the minimum standard for a stable, modern, financial life. When you build multiple streams, you build insulation from randomness, leverage for negotiation, and a future defined by choice. This is where your financial architecture begins. Chapter 2: The Low Capital Launchpad, Digital Products and Content. The modern economy rewards ideas that can scale without demanding heavy capital. This is why digital products and content creation have become the most efficient launchpad for professionals who want leverage, control, and long-term income stability. You are no longer limited by geography, logistics, or inventory. Today, a well-crafted digital asset can reach a global market while demanding almost nothing from you after creation. That is real leverage, and that is why this chapter matters. Digital products operate on a simple truth. You create once and you sell repeatedly. Whether it is an ebook, a micro course, a template bundle, a research guide, or a membership community, the marginal cost of serving an additional customer is almost zero. No shipments, no warehouses, no stock limitations. The work you do up front becomes an asset that continues to produce revenue long after the initial effort is done. That is why digital creators consistently see higher profit margins compared to traditional product builders. But a digital product without a distribution engine is silent. This is where content enters the equation. Content is visibility, trust, and authority. Content is the distribution channel that brings your digital product to the people who need it. Think of it as a funnel, a clean and predictable sequence. Free content that builds trust. A paid product that delivers deeper value, then a recurring offer that maintains the relationship. This is the architecture professionals use to transform expertise into income that does not depend on hour-to-hour labor. When executed well, the flywheel becomes self-sustaining. Your content attracts the right audience. Your digital product converts value into revenue. Your membership or ongoing updates turn occasional buyers into long-term customers. The more value you deliver, the stronger the audience grows, and the more predictable your income becomes. It is a system, not a gamble. Here is a clear, 7-step mini-launch plan designed for professionals who value order, discipline, and results over excitement and guesswork. Step 1. Validate demand. Before building anything, confirm that people actually want the solution you are planning to create. A short poll, a few direct messages, or a simple question to your audience can save months of wasted effort. Step 2. Create a minimum viable product, a lean version of the asset that delivers real value without requiring you to build the perfect final version. Step 3. Price test. Early pricing helps you understand perceived value, customer intent, and demand strength. It also gives your first buyers a sense of exclusivity and involvement. Step 4. Launch publicly. Present the offer with clarity. Explain the problem it solves, the transformation it enables, and who it is designed for. Step 5. Collect feedback. Ask early buyers for honest insights, refine quickly, and improve the structure and delivery. Step 6. Build a funnel for recurring value. Add a membership, monthly updates, coaching calls, a private community, or any mechanism that turns a one-time product into a long-term relationship. Step 7. Scale and automate. Use systems that deliver your product instantly, nurture your audience automatically, and convert consistently without requiring your constant presence. This approach is grounded in discipline. There is no hype, no guesswork, and no unnecessary overhead. It is simply the shortest path from expertise to income. Your micro-action for this chapter is simple. Choose one skill or one area of insight you already possess, then validate it with 10 quick messages to your network. Ask a direct question. Would this product help you? What would you expect it to include? If I created it, would you consider buying it? In 24 hours, you will know whether the idea deserves to move forward or be replaced by a better one. Digital products and content are not shortcuts. They are strategic assets that allow professionals to scale impact without scaling hours. They give you the freedom to diversify income, reduce dependence on one employer or one client, and create work that continues to reward you long after the work itself is complete. This is the power of the low-capital launchpad. Built correctly, it becomes the foundation of a scalable, independent, high-margin income ecosystem. And it starts with one decision. Turn what you know into something the world can use. Then let that knowledge work for you. Chapter 3. Asset-based income, real estate, dividends, private lending. We now step into the world of asset-based income, the income category that separates short-term earners from long-term wealth builders. This is the point where your money begins working harder than you do, where discipline replaces guesswork, and where the decisions you make today compound into financial stability and freedom over the decades that follow. Asset-based income is simple in theory and deeply powerful in practice. You acquire an asset that produces cash flow, appreciation, or both. That asset might be a rental property, a dividend-producing stock, a real estate investment trust, or a well-structured private lending agreement. Each carries its own balance of risk, reward, and time horizon, but all share a single principle: ownership creates leverage. Think of this chapter as a risk ladder. At the base are the most accessible, low-maintenance, low-capital options. At the top are investment paths that demand more money, more due diligence, and more risk tolerance, but offer higher potential returns. The smartest investors climb the ladder based on their capital, their skill, and their timeline, not on impulse or trends. We begin with public market assets. Dividend-paying stocks and exchange-traded funds remain one of the most reliable, regulated, and transparent ways to build portfolio income. Companies share a portion of their profits with shareholders in the form of dividends. Some grow their payouts year after year, creating a compounding effect that strengthens your income without additional labor. Reinvested dividends can dramatically accelerate long-term growth, especially for patient investors with multi-decade horizons. A simple entry point for beginners is a broad dividend-focused ETF. It offers instant diversification, lower risk compared to picking single companies, and predictable quarterly income. It also allows low-capital investors to begin building an income-producing foundation without rushing into complex strategies. This is the base of the ladder, and it is accessible to almost everyone. Step higher, and you enter the world of real estate. Direct ownership of rental property gives you two powerful engines at once: cash flow and appreciation. Rent pays you monthly, while the property itself tends to rise in value over time. But real estate requires significant capital, maintenance, management skills, and the ability to withstand unexpected costs. It is a strong path, but not always the first step. For those who want the benefits of real estate without the demands of being a landlord, real estate investment trusts offer a more scalable alternative. They allow you to invest in income-producing property portfolios without buying a building yourself. You still earn income through shareholder distributions. You still benefit from long-term appreciation, but your upfront cost drops dramatically and your responsibilities vanish. REITs are often the smartest gateway for professionals who want real estate exposure before committing to full ownership. Now we move to a niche that is growing rapidly among sophisticated investors: private lending. Instead of owning a property or a company, you become the lender. You provide capital to individuals or businesses and earn income through interest payments. This can be done through peer-to-peer lending platforms or through private agreements with vetted borrowers. When executed with strict due diligence, private lending can deliver strong returns with predictable cash flow, but it demands sharp risk assessment, legal clarity, and the discipline to say no when a deal does not feel clean. It is not for everyone, but it is undeniably becoming a core income stream for investors who have capital and networks. Every asset class carries real trade-offs. Dividend stocks offer stability but modest short-term yield. Real estate offers cash flow and appreciation but requires capital and management. REITs offer diversification and liquidity but are tied to market sentiment. Private lending offers high yield but higher risk. The wise investor does not chase, they allocate. This brings us to a simple rule of thumb you can adapt to your own circumstances. 70% in active income, 20% in scalable business assets, 10% in long-term financial investments. Refine the percentages as your stability increases, but begin with structure, not improvisation. Then apply the 90-day focus test. Select one asset class, Study it deeply, execute one step, and measure progress. Avoid spreading yourself across 10 strategies and mastering none. Your micro-action for this chapter is straightforward. Open a demo brokerage account and explore dividend-focused ETFs, or research the top real estate investment trusts in your region, or evaluate a reputable peer lending platform and read the risk criteria. This is not about investing money today. It is about becoming literate in the tools that will build your future asset base. Asset-based income rewards patience, clarity, and discipline. It is the quiet engine behind financial independence. It is how professionals secure their stability, expand their options, and build a life that is no longer shaped by a single employer or a single source of income. The earlier you start, the stronger the compounding becomes. This is where wealth begins, and this is where your future becomes something you intentionally shape, not something you react to. Chapter 4. The Hybrid Model Side Business Combined with Investments. There is a point in every wealth builder's journey where earning more is no longer enough, where relying on a salary alone feels fragile, but running a business alone feels unstable. The answer is not to choose between the two. The answer is to combine them. The strongest financial lives are built on a hybrid system, where active income from a side business fuels long-term assets, and where those assets steadily reduce your dependence on active work. This chapter is about designing that system intentionally. Think of your life as a two-engine aircraft. The first engine is your active income, your side business, your consulting work, your specialized service. The second engine is your investment portfolio, the place where your profits accumulate, grow, and eventually pay you back. When both engines run together, you gain resilience, flexibility, and financial lift that you cannot achieve with just one. Professionals who build hybrid income models follow a clear sequence. They start with a small side hustle that solves a real problem for a specific customer. They charge for their expertise, not their time. They stabilize their service, then turn it into something that can scale without consuming their entire schedule. This might be a productized service with fixed deliverables, a digital product that complements their expertise, or a system that allows them to serve more clients with the same effort. Once that engine is producing consistent monthly profit, they redirect a portion of it into long-term investments. A common pattern looks like this. A designer offers freelance work. After a few months, that transforms into fixed packages with clear outcomes. The designer raises their rates, reduces revision cycles, and standardizes delivery. Eventually, they launch templates or brand kits as digital products. The active income grows, but the hours do not. With each profitable month, a percentage is allocated automatically into dividend funds, real estate investment trusts, or long-term index portfolios. What began as a side project evolves into a hybrid wealth machine. The psychology behind this model is powerful. Sequencing lowers resistance because you focus on one step at a time. Reinforcement comes from seeing both sides grow together. Milestone triggers help you level up without overwhelming yourself. For example, once your side business consistently earns a certain amount per month, you increase your investment allocation. When your investments reach a defined value, you expand the business. When both engines rise, your financial stress falls. But to make the hybrid model sustainable, cash flow discipline must be non-negotiable. Too many people build a side business that earns well but leaks money through poor management. To prevent that, Adopt a simple cash flow formula that professionals rely on. Earn, allocate, automate. Earn is your active revenue. Whether it is a side business, consulting, or a specialized service, this is the income you control through skill, effort, and quality. Allocate is the strategic split that ensures your income does not evaporate. A simple structure many professionals start with is 50% for operations and personal needs, 30% for investments and long-term wealth, and 20% for reinvestment into growth, whether that is software, tools, marketing, or training. These percentages can shift as your needs evolve, but the principle remains. Every dollar has an assignment. Automate is the safeguard that protects you from emotional decision-making. Set an automatic transfer that moves a fixed percentage of your side business income into your investment account or growth fund. When the transfer happens without your involvement, consistency becomes effortless. The goal is to make your financial behavior predictable even when life is not. This model works because it anchors you on both sides of the wealth equation. Your active income responds quickly to skill and effort. Your assets respond slowly but predictably through compounding. When you combine them, you create a financial life that adapts to opportunity while being insulated from volatility. Here is the micro-action that brings this chapter to life. Open your banking app or platform of choice. Set a recurring transfer that moves a percentage of your side business income into a designated investment fund. Even if it is a small amount, the action is what matters. You are installing a system that separates builders from dreamers. You are transforming extra income into long-term wealth, not leaving it to chance or emotion. The hybrid model is the most stable strategy for modern professionals. It gives you the agility of entrepreneurship with the safety of long-term investing. It ensures that every hour you work today strengthens the life you will live tomorrow. It is the bridge between short-term performance and long-term stability, and it is one of the most reliable ways to build a financial future defined by choice, not pressure. Chapter 5: Monetizing Your Assets, Skills, and Attention. There is a moment in every professional's journey when they realize they are sitting on untapped value. Skills they mastered years ago, assets they already built, attention they earned through consistency. Most people overlook these resources because they are familiar, but familiarity does not mean worthlessness. In fact, the most profitable income streams often begin with what you already have. This chapter is about turning your existing capital into revenue channels without starting from zero. Begin with an inventory. 3 categories: skill, asset, audience. Your skills are the things you can do with competence and confidence. Writing, design, analysis, coaching, strategy, editing, research, communication, technical knowledge, leadership, anything that solves a problem. Your assets are your digital or physical creations, templates, frameworks, case studies, checklists, designs, tools, content libraries, photos, data sets, code, processes you have refined over years. Your audience is the attention you have earned. Social platforms, subscribers, clients, colleagues, an industry network, or even a small group of people who trust your expertise. Once your inventory is clear, monetization becomes a strategic game, not guesswork. Professionals often underestimate how quickly their experience can translate into revenue when packaged correctly. A 1-hour consultation is a monetizable product. A 1-page template that saves someone 30 minutes a day is a monetizable product. A 15-minute audit that reveals blind spots is a monetizable product. These are low-friction offers, easy to build and easy to sell, especially when your time is limited and your energy needs to be directed into scalable outcomes. For skills, think in terms of precision offers rather than broad services. Instead of "I offer consulting," frame it as "I help managers fix communication breakdowns in one focused hour." Instead of "Vash, I do design," frame it as "I deliver a complete brand starter kit in 72 hours." Precision reduces confusion and increases value. Your expertise becomes a product, not a vague promise. For assets, focus on leverage. A digital template can be downloaded 1,000 times without your involvement. A strategy guide can be sold repeatedly. A well-structured playbook can become a micro-product that companies purchase to train new employees. These assets are the closest thing to modern digital capital. Built once, sold many times, scaled without constant labor. This is the foundation of digital product economics. For audience, the principle is simple. Attention is currency. If people listen to you, watch you, read you, or trust you, you have an economic engine waiting to be activated. You can introduce affiliate recommendations based on tools you genuinely use. You can create a paid newsletter with deeper analysis. You can launch a small subscription where members get monthly insights or templates. The goal is not to exploit attention, but to create value that your audience already wants and is willing to pay for. What professionals need most is a list of concrete, practical ideas that can be executed quickly. Here are some turnkey micro products that work across industries and require minimal capital. A 1-hour paid consultation, a 30-minute strategy review, a 15-minute paid audit for websites, resumes, portfolios, or business ideas, a 1-page actionable template, a short guide or micro ebook on a specific skill, a toolkit that solves one problem with clarity, a video mini training on a common challenge, a done-for-you starter template for emails, proposals, or systems. These are not theoretical ideas. They are proven monetization structures used across consulting, coaching, design, content creation, technology, writing, marketing, and education. They work because they respect the realities of modern attention spans, limited budgets, and the need for fast results. The psychology behind this chapter matters. Time is scarce, so professionals value solutions that save it. Return on investment is calculable, so buyers gravitate toward offers where value is immediate. Identity drives action. So when you position yourself as someone who transforms your expertise into solutions, people trust your clarity and are willing to pay for it. Your monetization strategy should not revolve around building a massive business. It should revolve around creating aligned offers that match your skills and the needs of your market. Simplicity beats complexity. Focus beats ambition. Small, consistent actions beat irregular bursts of effort. Here is the micro action. Choose one skill or one asset from your inventory. Turn it into a minimum viable offer that can be sold within 7 days. Price it. Describe it in one sentence. Offer it to the people who already trust your expertise. Do not wait to perfect it. Launch, learn, improve, and scale. The fastest path to real revenue is through simple offers executed quickly. This chapter is about reclaiming your value. Your knowledge has weight. Your experience has economic force. Your attention has potential. When you combine them with intention, you unlock a level of income that does not require reinvention, only recognition. Chapter 6. Systems, Automation, and Scaling. When a business grows past its first wins, the real question becomes simple. Can this revenue repeat itself without you being present every minute? The difference between a side project and a scalable operation is not effort, it is system design. Every business that lasts understands one truth. Manual work creates progress. Automated work creates freedom. Your goal in this chapter is to move from unpredictable spikes of income to a rhythm that runs even when you are offline. At the heart of scaling are three metrics: lifetime value, customer acquisition cost, and churn. Together, they tell you whether your business can grow without collapsing under its own weight. Lifetime value answers the question, how much does a customer spend with you over the entire relationship? Subscription companies, membership platforms, and service retainers win here because they extend the customer journey. Customer acquisition cost tells you how much it takes to acquire that relationship. When your CAC is lower than your LTV by a healthy margin, you have the ability to scale with confidence. Churn shows how quickly customers leave. High churn destroys growth because you spend energy replacing people who are already walking out of the door. This is why systems matter. They stabilize these numbers by reducing friction and increasing consistency. At the foundation of any scalable digital operation is clarity of funnel. People discover you through content. They engage with an entry point offer, and they are nurtured toward deeper solutions. Without a clear path, scaling is just noise. With a clear path, every piece of content carries a purpose. Automation is what locks this structure into place. And for beginners, the most reliable and efficient approach is the three-tool stack. One email provider to capture and nurture your audience, one checkout solution to handle payments, and one hosting platform to deliver your product or service. This creates a simple but powerful system that removes friction from your customer's journey. You do not need expensive software to scale. You need predictable steps executed the same way every time. Email automation is the backbone. A strong welcome sequence sets expectations, introduces your philosophy, and directs people to their next step. Automated follow-ups, segmentation, and behavioral tagging allow you to speak to your audience based on what they actually do, not what you assume they will do. Payment automation ensures that every purchase is logged, every subscription renews without manual input, and every customer receives what they paid for instantly. Delivery automation closes the loop by sending digital products, scheduling onboarding, or granting access without human involvement. The beauty of automation is not that it replaces work. It replaces repetition. It removes the bottleneck of you. And when the repetitive tasks are handled by systems, your energy is freed for strategy, creation, and high-leverage decisions, the things that actually move the business forward. Scaling is not just about automation, it is about prediction. Subscription models and memberships win because they transform revenue from event-based to recurring. This increases financial stability and improves planning accuracy. Investors, operators, and executives prefer predictable revenue because it reduces risk and opens the door to long-term decision-making. When your revenue is stable, you can spend with confidence, hire with clarity, and build with patience. But scaling also demands measured simplicity. Complex systems break. Simple systems scale. Your job is not to build a machine filled with unnecessary parts. Your job is to identify the 3 or 4 processes that drive most of your revenue and automate those first. Lead capture, nurturing, payment, delivery. When these 4 are reliable, everything else becomes easier. The path forward is methodical. Build the system, test the system, refine the system. Watch the metrics. If LTV rises and CAC stabilizes, the machine is working. If churn decreases, your audience feels supported. If revenue becomes predictable, scale becomes a decision, not a gamble. Today's action is straightforward. Create an email list if you do not already have one. Build a simple lead magnet that solves a clear problem. Connect it to an automated welcome sequence and activate your 3-tool stack. This single system can become the backbone of everything you scale in the future. Business growth does not happen by chance. It happens by design, by structure, by systems that run even when you are not watching. This is how a small operation becomes something enduring. This is how you move from effort-based income to systems-based income. And this is the moment where your business stops relying on your intensity and starts relying on your architecture. Chapter 7: The Mindset and Risk Management Playbook. A diversified income life does not begin with money. It begins with mindset. When you look at people who build stable, multi-stream portfolios, you see the same pattern. They think in systems, they plan in cycles, and they make decisions based on rules, not emotion. That mindset is the anchor of everything you have built up to this point. Risk management is not about fear, it is about clarity. You are not trying to avoid loss. You are trying to make loss survivable. Every investor, every operator, every professional who thinks long-term understands that volatility is a companion, not an enemy. What separates those who grow from those who collapse is the ability to stay calm when outcomes fluctuate. The goal is simple: protect the downside, position for the upside, and maintain the discipline to stay in the game. Decision rules are the backbone of this chapter. They prevent paralysis, they protect your judgment, and they give you a structure when your emotions want to take over. A stop-loss rule tells you the exact point where an investment or project has failed its purpose. A reallocation rule tells you when to shift capital or attention into higher-performing streams. These rules keep you from reacting blindly, and they shift your focus from noise to signal. Long-term builders rely on a rebalancing rhythm. Once a quarter, they evaluate what is working, what is lagging, and what needs to be reduced. Portfolio rebalancing is one of the most effective ways to control risk because it forces you to realign your capital with your goals. It keeps your allocation balanced and your exposure measured. It also reinforces a mindset of steady improvement rather than emotional swings between excitement and frustration. The mindset behind diversified income is built on confidence that grows through small wins. When you complete one project, generate one sale, or execute one system, you reinforce your identity as someone capable of building streams. This is why experimentation is essential. Not every stream becomes a pillar, but every experiment strengthens your skill, your capacity, and your clarity. This is where the 90-day portfolio experiment comes in. It is a focused, structured window designed to push you beyond theory and into measurable action. You choose one income stream, one skill, or one asset to develop over the next 90 days. You set a clear input goal, a revenue target, and a time allocation rule. Every week, you run a checkpoint. What did you produce? What moved? what stalled, and what needs to be adjusted. At the end of the 90 days, you make a decisive call: scale, sustain, or pivot. This approach prevents endless planning and forces real-world learning, which is the most reliable form of risk management you have. Mindset also shapes how you process volatility. When a revenue source dips or an investment slows down, the untrained reaction is to abandon ship. The trained reaction is to evaluate against the rule. Is this expected fluctuation or structural failure? This level of thinking is what allows you to hold steady because you no longer rely on emotion to drive your decisions. You rely on processes that already account for uncertainty. The strongest earners and the most stable portfolio builders all share one trait. They operate with a long-term identity. They see themselves as builders, investors, operators, and learners for the next decade, not the next week. When you adopt a long-term identity, short-term discomfort loses its power. You begin to measure progress in cycles, in habits, and in improved decision-making, not just in monthly numbers. This chapter is your shift from reactive to strategic, from scattered effort to deliberate practice, from chasing opportunities to engineering outcomes. So here is your action. Choose your 90-day project. Define the stream you want to build. Outline the weekly inputs you will commit to. Set your success metrics and mark your checkpoints. Build a simple tracking sheet that logs effort, revenue, lessons, and time spent. At the end of the cycle, review with honesty. Then decide whether to expand, refine, or replace the stream. This is the moment where everything you have learned becomes a unified philosophy. Diversified income is not just about money. It is about building a life where your future is shaped by design, not crisis. A life where uncertainty does not scare you because you have systems, streams, and strategies working together. This is the final chapter, but it is also your beginning. You now have the foundations, the assets, the systems, and the mindset required to build a portfolio that grows with you. Your next step is commitment. Commit to your 90-day experiment. Commit to your rules. Commit to your identity as a long-term builder. The future belongs to those who prepare for it. Starting today, that includes you.